Own VTIAX in a taxable brokerage account? If so, you're going to want to check out this video. Hi, I'm Sean Mullaney, financial planner. Let's get started. So VTIAX is the ticker symbol for the Vanguard Total International Stock Market Index Fund. That's a mutual fund that owns the stock of over 7,700 non-U.S. companies. When you own it in a taxable brokerage account, you get a Form 1099 DIV every year. That form reports two things to you as the shareholder. First, it reports the dividends that VTIAX paid out to its shareholders during the year, so you can put that on your tax return. The second thing is in box 7 of that Form 1099 DIV. It's called foreign taxes paid. So what's going on with that, right? So let's think about the different companies that VTIAX owns. When they pay dividends to their shareholders, including VTIAX, that's one of their shareholders, oftentimes they're required to withhold from that dividend payment taxes to the home country. So let's give you an example. Say Toyota, which is a Japanese company owned in VTIAX, it pays a dividend to its shareholders. VTIAX, a U.S. entity, is one of those shareholders. Under the U.S.-Japanese tax treaty, what happens is 10% of the dividend paid to VTIAX is withheld as a dividend withholding tax. The theory is Japan wants to assess taxes on dividends paid by Japanese companies. And if it's paid to a U.S. shareholder who's not going to file a tax return in Japan, the only way they're getting that money is through a withholding tax. So that's what happens, right? So 10 cents on every dollar paid out to VTIAX by Toyota is withheld by Toyota and remitted to the Japanese government. What happens then is VTIAX pays the net dividend to its shareholders and reports on the 1099 DIV two things. One is the gross dividend, and two is that 10% foreign tax withheld. And this happens with all the companies inside VTIAX. Whenever there's a dividend withholding tax, that's all aggregated at the mutual fund level, and then the mutual fund parses that out to its different shareholders. So what does that mean for your U.S. tax return? It's actually good news. If you own it in a taxable brokerage account, you get to take that box 7 amount, say that's $100, right? You report that on your federal income tax return, and generally speaking, you get a dollar for dollar reduction against your U.S. income tax liability. That's pretty good. And why is that? The idea is that that money is essentially double taxed. It's subject to tax in Japan, in this case, Toyota, right? But it could be any country, right, where there's dividend withholding. And it's then taxed in the United States. So to mitigate that double taxation, the U.S. tax rules allow for a foreign tax credit. And that leads us to something called tax basketing or tax location. The idea is you want to think about things like the foreign tax credit when you decide what account to hold different investments in. VTIAX generates a foreign tax credit when it's held inside a taxable brokerage account. But it doesn't generate a foreign tax credit when it's held inside a Roth IRA, a traditional IRA, a 401k, an HSA, right? Those are all great accounts, don't get me wrong, but from a foreign tax credit perspective, they don't really work well because you don't get a foreign tax credit when you hold something like VTIAX in one of those tax advantage accounts. There's just no foreign tax credit. And in fact, when VTIAX is held inside a traditional 401k or a traditional IRA, it's actually subject to double tax, right? Because the Japanese dividend withholding tax or whatever foreign jurisdiction dividend withholding tax obtains, it applies. And then years later, when the investor goes to make a IRA withdrawal or a Roth conversion or has to take out their required minimum distribution, guess what? Another layer of tax. This time it's the U.S. tax, right? So if everything else was equal, arguably what you'd want to do is hold VTIAX inside taxable accounts. Now, that not everything else is equal in reality, but it's useful as a sort of an analytic tool to say, oh yeah, there's this foreign tax credit and it only obtains when I hold that investment inside a taxable brokerage account. It's certainly a consideration in terms of where assets should be tax located or tax basketed. That said, I have yet to meet the person who failed to achieve their financial goals because they didn't get tax basketing or tax location right on their investments. So just keep that in mind. It's a great little tax tactic, but don't go overboard with it. Lastly, this video is not investment advice for you or anyone else. It's just an exploration of a unique U.S. tax characteristic of VTIAX. Hope you enjoyed the video. If you did, please hit that like button and then also subscribe to my channel. Thank you so very much. I'll see you next time.